All right, guys, welcome to another live stream. Welcome to another live stream. Happy Wednesday. Happy Wednesday. All right, so today we had a Federal Reserve meeting. We're going to go over the highlights of the meeting, but just high level, the Fed did decide to keep rates steady, which we already knew was going to happen. It was a 92, I think 92 to 95% chance that they were going to keep it steady. So the market already priced it in. But what we want to pay attention to is basically what Jerome Powell has to say at these, at the Fed when he does his speech. So let's get into the summary. Let me make sure my mic is working before I go over the highlights, and then we'll play chess afterwards. What we want to pay attention to is basically what Jerome Powell has to say at these, at the Fed when he does his speech. So let's get into the summary. Let me make sure my mic. All right, looks like my mic is working good. Let's get into the Fed meeting summary today. And then we'll take a look at markets, and then we'll play some chess. Okay, so Fed meeting summary. So rates held steady at 3.5% to 3.75%. Like we said, no cut. This is the second straight pause. Remember, we had a rate cut in September, we had a rate cut in November, and then we had a rate cut in December of last year. And then the Fed switched its stance. It was like, okay, we're going to pause because I believe the job numbers were going, the unemployment was going up. Or was it? No, I think jobs were actually, the unemployment was going down, and they decided to pause and like take it one meeting at a time. So the last Fed meeting, which I believe was January, we didn't cut rates, and now we didn't cut rates again. So this is the second straight pause. Fed remains in a wait and see mode, which is what they've been since the last cut in December. Translation: they're not confident enough to cut yet, but also not tightening further. Right? He basically said too in the last Fed meeting that they know they're not going to hike rates, and there was actually two to three people in the Fed meeting today that were in favor of increasing interest rates. Okay, so that discussion was on the table, but the majority of people are not for hiking interest rates. But it's important to mention that that was actually discussed at the meeting today, right? So Powell's speech highlights, number one, data dependent remains the core message. And again, he always says this, we have to look at the data. We have to look at the data. He's not a type of person to listen to politics or listen to what somebody says. He's really somebody that goes off the data. So no preset path for rate cuts. Decisions will be made meeting by meeting, right? Okay, so meaning the Fed is flexible. Markets will react heavily to each data print, CPI. We get these CPI, PPI numbers at the beginning or middle of every month, the jobs numbers. So those are all things that will influence the Fed's decision to cut or raise or keep rates steady. Two, economy still stable but slowing. Growth is holding up. Labor market showing some cooling. And inflation still not fully defeated. And yeah, that inflation thing really, we've seen an increase in oil. And the reason being is because of the Iran, Israel, and U.S. conflict. So that Strait of Hormuz blockage, it owns, or it's responsible for 20% of the oil that transacts throughout the world. So that has been making inflation go up. And it's been a concern for the markets, right? Along with the war itself. Hey, what's up, Harshad Patel? What's up, man? What's up, buddy? Okay. So, yeah. So basically, he's on a wait and see basis. He's saying, okay, we're going to wait, look at CPI, look at PPI, look at job numbers, and then we're going to make a decision on whether we're going to cut interest rates. But I think it's interesting that, a couple people were talking about hiking interest rates in that Fed meeting. Now, you always get those outliers. I believe there's a total of 12 people on the board, and you always get like one or two that's just, even when we were for cutting interest rates, there was like somebody who was for a 50 or 75 basis point cut. So there's always some outliers in that group. Okay, so we said economy still stable but slowing. Growth is holding up. Labor market showing some cooling. Inflation still not defeated. This is the balancing act. Cut too early we have inflation risk. If we wait too long, we have recession risk. So we're kind of fighting those battles where it's like we can't cut too early because it's going to cause inflation, and then we can't wait too long because then we risk the chance of going into a recession, right? Okay, 3, internal Fed split is growing. Some members want cuts sooner, labor weakness. Others want higher for longer, inflation concern. This is what we talked about. There's a split. Not majority of people wanted to cut rates, but there was a portion of people that wanted to increase interest rates. This is important. The Fed is not unified anymore. That usually precedes a policy shift soon. And yeah, so anytime you get that split between a group with any type of decision, usually people are on board. You get the majority of people voting for the same thing. But now they're starting to see the separation in the Fed, and we're starting to see that people are starting to sway, and you're seeing a bigger divide. And they suggest that a policy shift may come soon. 4, uncertainty is elevated. Policy risk, tariff, geopolitics. We talked about the war. Fed explicitly signal less visibility on outlook. Translation, expect volatility. Reactionary policy, not a smooth path. Okay? So that was 4. Number 5, cuts are still on the table, just not yet. And I don't know if you guys remember 2025. We're almost playing out the same way. In 2025, we didn't get rate cuts until the later half of the year, September, and it's looking to play out the same way. We didn't get one in January. We didn't get one this time. And we're already looking at the percentage. It's not that high for the next meeting, which is in April. So a lot of things have to change. A lot of the CPI, PPI numbers need to come in favor of a rate cut in order to change the Fed's decision, right? So cuts are still expected, cuts later in 2026. Fed basically saying now, not now, but likely later. Okay, so that's pretty much the summary of the Fed meeting today. Let's take a look at the markets and how the markets did and reacted today. Equities choppy, mixed. Yeah, the equities market was down. Stocks, initial reaction, relief, no surprise hike, but no dovish pivot, even equal limited upside. So the market liked, okay, no rate hikes. We obviously knew that. That was priced in. But then everybody looks towards that forward guidance from Powell's speech to make a decision on whether the market's going to go up or down. And it wasn't really dovish to propel the markets up, right? Market takeaway, no immediate liquidity boost equal no explosive rally yet. Bonds and treasuries yield slightly down. Stable reflects slowing growth expectations. Future cuts still priced in. Dollar generally weak or flat because no hawkish surprise. Okay, so that's a dollar. Crypto. So crypto's actually, so Bitcoin's holding that $72,000 to $75,000 range. And we spoke about how there's two camps that think, okay, we're going to follow the 4-year cycle. People believe we're going into a deep bear market. And then we have the other half where they believe that we're going to go on up to 100K and create a new all-time high. I honestly, yesterday, I think it was yesterday where we got clarity from the SEC that basically now they've ruled cryptocurrencies as a commodity, a collectible, and then something else, some type of tool, a digital tool or something like that. So basically, we got really good clarity from the SEC, and now it looks like the Clarity Act may be passing here pretty soon, because there was some, I forget what senator it was a lady, but she was saying we're very close. She's like, I know we've been saying this for the last 4 or 5 months, but we are very close to getting the Clarity Bill signed. And I think the fact that the SEC has came out with basically a taxonomy for the crypto environment ecosystem to declare that cryptocurrencies are not securities, that just boosts, seals the deal that we're going to get the Clarity Act here pretty soon, which is pretty nice, right? And I think that's why we're really not going to go, if we go down lower, We're not going to go as low as people are predicting, like 49, 50K, in my opinion, because we're just getting so much bullish catalyst. And then also, most likely we're going to get rate cuts. It is a midterm election year. So we are going to, there is pressure from the administration to make things look, better for midterm elections. Just my opinion. Big picture, what actually matters? We are in the transition phase from tight policy to eventual easing, which I really think we're already in easing. This historically where smart money accumulates, markets look confused. The Fed is buying time, waiting for inflation confirmation, labor clarity, and things like that. All right, so that's pretty much the update. No rate cut. The Fed is basically waiting for more CPI, PPI data, and we just got to wait and see where the market takes us, right? Overall, a little bit down in equities, and then crypto market's kind of stabilizing, so it doesn't look that bad. I think since we got that SEC clarity as far as cryptocurrencies being a commodity, that's really keeping crypto prices stable. And I think if we could get that Clarity Act passed here soon, then we could see crypto go, BTC get into the 80s and 90s here pretty soon, in my opinion. All right. Okay, so let's play a few games of chess, and that'll be it for the day. Okay, let me fix this box because it's not as clear. Okay, I think we're good here. All right. Like, oof. Let's see. You know what? I should have taken. Yeah, I should have taken that. Darn it. Um. 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 Let's do this. Darn it. I didn't see that either. I don't know if that was the right thing. Oof. Yeesh. Darn it. Let's go. Ah, he got me with that. My goodness. I felt so good this game, unfortunately. All right. I resign. Let's see who wants to run that back. Man, I can't believe I made some wrong moves there towards the end. Oh, he doesn't want to run it back. Of course not. All right, that was one, and then one more, and I'll be done for live today. Priorities. Priorities. There. Um. I wonder if I take that. Could he trap me? I gotta play that game. I think what I can do is take that. Oof. Ooh, I see what he's trying to do. I see what he's trying to do there. What? That was a blunder. I was like, what is that? Free queen. Free queen. The free queen. Okay, one more, and that'll be it for the day. Good stuff. Good stuff. Hopefully, we can end it with a W here. I'll just do this. I'll just do this. All right. Hmm. Push these pawns up. Hmm. Let's get rid of that. Um. Um. um, 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 um. um, Play like the tempo. Ah. Yeah, he had me there. He could have just. That's fine. I think. Oh. Mm, wow. I did not see that. I did not see that. Man, that sucks. All right. Okay, no worries. Ah, and the timing is just so bad. 26 seconds. Yeah, I know he's trying to. Oh, darn it. Darn it, ran out of time. That was a good game, though. Good game, can't complain. Good game, good game, good game. All right, guys, so that is pretty much it for the stream today. The Fed decided to keep rates steady and basically just wait on future data to make a decision on whether we're going to get rate cuts this year, which we're going to get rate cuts this year. It's just not going to be, most likely won't be in the next meeting, but maybe towards the middle half of the year. And it also depends on if Jerome Powell gets replaced. Like if he ends up getting replaced, then it could switch everything up. So you just got to wait and see. That's pretty much it. I'll see you guys in the next one. Take care.